Hello investors, welcome to the channel. For today's video, I'll be giving you a walkthrough of 5 stocks I have in my portfolio and show you how I intend to keep investing in these 5 stocks in order to grow the account portfolio consistently over time. If you guys are new here, then my name is Tim, and on this channel, I try to give you as much information as I possibly can in order to help you push your portfolio to the next level. Now, if this sounds good to you, let's go ahead and get right into it. So for today's video, I'm going to go ahead. It's going to be a continuation of the previous video. In the video right before this, I went ahead and show you the first 5 stocks in my portfolio and how I intend to use it in order to keep growing this account portfolio. For this video, I'm going to show you 5 additional stocks in the portfolio and walk you through how I intend to use it, my portfolio allocation, and how I do intend to keep investing in these stocks over the long term. Now, my name is Tim, like I mentioned. And I'm that guy that started off an account portfolio with only $65. The reason I went ahead and do that is I want to show you that it does not matter what amount of money you have in your portfolio, you can start investing today. If you do have as little as $5 or even $1, you could use that to go ahead and start getting invested in the stock market right now. Almost every single brokerage platform out there, which includes Robinhood and even some of the legacy brokerages, they do allow you to go ahead and start investing with what's known as dollar cost averaging. This is a system where you could go ahead and just put consistent income into any portfolio of your choice with a group of stocks or ETF if you choose to, and you could go ahead and buy fractional shares. Fractional shares mean you could buy $1 worth, $2 worth, $5 worth of whatever stock it is. So there's literally no reason for you to go ahead and not get invested today. That being said, let me go ahead and get on with the video. I'm going to show you the additional 5 stocks that I have in the portfolio. So for video number 1, I went through the top 5 stocks which I have in the portfolio, mainly for value stocks, which is Microsoft, Amazon, Meta, Google, and I went ahead and show you one of the stocks I have for exponential growth, which was New Holdings. For today's video, I'm going to go ahead and show you the dividend part of the portfolio, and I'm going to get into the second stock I have for exponential growth right here. So we're going to start today with Altria, and that ticker is going to be MO. Now, the reason why I went ahead and started off this portfolio with individual stocks as opposed to ETF is because I have been in the market for quite a long time now, so I actually have a better understanding than most of how the market operates. That being said, if you are new to the stock market, I would highly advise that you do not go ahead and invest into individual stocks. You should definitely go ahead and get started with ETFs. ETFs are exchange traded funds, and these are a basket of stocks that are grouped together in order to reduce your liability. So feel free to go ahead and get started with that. So one of the stocks I have in my portfolio, and I have this stock in my portfolio purely as a dividend payer, is going to be Altria. Altria is in the cigarette and tobacco industry, so it may be a bit controversial for some. However, for me, I like it because of its dividends growth, and I'm going to get into that in a second. The portfolio value for Altria stands right now at $50.27. And thus far, since I've added it to the portfolio, I'm up $5.27, or roughly around 12%. Altria makes up around 10% of my portfolio. Now, with Altria and the other stocks I have in my portfolio, this portfolio, I like to call it a set it and forget it portfolio. So what I went ahead and do is I went ahead and added recurring investments to the portfolio. And with Altria, I'm constantly going to be recurring, or rather constantly be buying $20 worth of Altria every single month. In addition to me starting off this portfolio of only $65, I promised myself to add $250 to the portfolio and spread out that $250 amongst the 10 stocks in my portfolio. And I'm going to show you step by step how I'm going to grow this account portfolio right in front of your very eyes. So back to Altria and the recurring investments. So like I mentioned, this is set it and forget it. So every single month around March 5th, this portfolio is going to automatically go ahead and buy $20 worth of Altria. Now, I was mentioning about Altria and their dividends. Altria has been in existence since 1919, and Altria is paying a very, very nice dividend of around 6.19%, which is really, really nice. Altria is in a category of its own. The category that it's in is what's known as a dividend king. A dividend king is any stock that's in the S&P 500 and has been increasing the dividends for more than 50 years. So this stock has been paying a dividend for more than 50 years. So this stock is a consistent paycheck for anyone that want to get invested in it. So that's one reason why I have Ultra in my portfolio. To go ahead and get into another stock I have in my portfolio, and that's going to be Chevron, and that ticker is going to be CVX. Now, Chevron is in the oil and gas sector, and it pays a very decent dividend as well. So let's go ahead and get into Chevron. So with Chevron, the amount of money I have invested in Chevron is $48.90. And since I had Chevron into the portfolio, I'm up $3.90 or around 9% up. My portfolio diversity for Chevron represents 10%. So most of the dividend stocks in my portfolio is going to be around 10% of my portfolio. And if you go ahead and look at the video before this, most of the value stocks I have in my portfolio, they represent around 12% of the portfolio. Chevron 2 is being put on autopilot, so around $20 is going to be bought into Chevron shares every single month. Now, Chevron as well is what's known as a dividend king. This stock has been increasing its dividends for more than 50 years now, and it's also in the S&P 500. So this is a very, very good stock to set up as a foundation for your portfolio. Hence, it's in my portfolio. The dividend yield on Chevron is 3.72%, which is not bad. I always like to get involved in dividend stocks that has a 3% yield or higher. And that just helps me grow my portfolio consistently. And it shows me exactly what I should be expecting on a regular basis. So for instance, the average of my stock folio and all the dividend stocks is going to be roughly around 5%. So I know this portfolio is going to be growing by a minimum of 5% with the 4 dividend stocks that I have there. So that's Chevron. Let's go ahead. We're going to jump into the other stock we have. And that stock is going to be C. And that ticker is going to be PEP. So most of you guys do know Pepsi. Pepsi is one of those beverage companies and it has a vast array of stocks under its belt. So with Pepsi, my market value is around $49.32. I'm currently up $4.32, which is roughly around 10% up. And once again, the portfolio diversity is around 10%. The amount I'm going to be contributing to Pepsi on a monthly basis is like the other 2 dividend stocks, and that's going to be $20. Pepsi 2, believe it or not, is also a dividend king. It has been increasing its dividend for more than 50 years. It was founded in 1965 and it pays a really, really nice dividend of 3.39%. Pepsi is one of my favorite stock I own in this portfolio because in my bigger portfolio, I do have Coca-Cola and I don't like to have 2 of the same sector dividend stocks in my portfolio. So Pepsi is going to pay me a check every quarter or 3% of whatever the share price is trading at. So the last stock I do have in my portfolio, which is going to be for dividends only, is going to be none other than Realty Income. And that ticker is going to be O, just the ticker O. So here we are on Realty Income, and Realty Income is known as a REIT, which is a real estate investment trust. So my market value for Realty Income is going to be 48.94, and since I've had it in my portfolio, I'm up $3.92 or around 9%. Once again, my portfolio diversity is roughly around 10% for Realty Income. Just like the other stocks in my portfolio, Realty Income, I do have a recurring investment of $20 that's going to be bought into Realty Income on a monthly basis. Realty Income is what's known as a monthly dividend payer because it pays a dividend every single month. And as you can see here, I've already started getting dividends and it's going to be used to reinvest into the stock. When investing for dividends, you could use a strategy known as the DRIP strategy. DRIP simply stands for Dividend Reinvestment Program. What it does is that every time you get paid a dividend, that dividend is going to be automatically reinvested to buy more of that stock. So as you can see here, I have my dividends going to be reinvested whenever the stock market opens. Now, one of the good things about Realty Income is that I think I mentioned this before, it pays you every single month as opposed to the other 3. The other 3 pays you on a quarterly basis. So while I'm waiting for a check from the other 3, I'm getting a check from Realty Income every single month. The amount of the check I'm getting from Realty Income is going to be 4.91%. Once again, it hits my criteria for dividend paying stock, which is going to be above the 3% yield. Now, Unlike the other three previous dividend stocks, Realty Income is not a dividend king. However, Realty Income is known as a dividend aristocrat. This means it has been increasing its dividend yield for more than 25 years. 25 years of constant dividend increase is just as good as 50 years. So, hence, I have Realty Income in my portfolio. So the four dividend stocks I have in my portfolio, primarily for dividends, and I will be doing the drip strategy in order to grow the dividend stocks a lot faster, is gonna be Altria, with that ticker is gonna be MO, Chevron, that ticker is gonna be CVX, Pepsi, that ticker is gonna be PEP, and lastly, Realty Income, that ticker is gonna be O. Now let's go ahead and check out the stock I have in the portfolio for exponential growth. I did mention one in last week's video, and for this week's video, I'll give you the other one, which is going to be Oscar Health. Oscar Health is in the controversial healthcare sector. I say controversial because most of the stocks in the healthcare sector, they not only have low margins, but right now they're all been trending downwards because of different reasons. The reason I have Oscar in the portfolio is because I want exponential growth from Oscar. Oscar is one of the smallest in the healthcare sector, so it's going up against huge behemoths like United Health, Merck, Molina Health. So I expect Oscar Health to grow very rapidly because of its size. Because it's small, it would be able to grab market share a lot faster than the already big and established healthcare sectors. So I do see Oscar Health increasing very fast over the next coming years. Now, my market value for Oscar is going to be $22.74. And since I've had it in the portfolio, I'm down $2.26, or roughly around 9%. The portfolio diversity, as you can see here, is only 4.8%, which is a lot lower than the rest of the stocks. The reason why it's a lot lower is because Oscar Health is pretty much still new, as opposed to these other stocks that has been around from 1969 or 1816 or something. Oscar is relatively the baby in the portfolio. So I want to reduce my portfolio risk by having a lot smaller allocation to the portfolio. Just like all the other stocks in the portfolio, I am going to be constantly in buying Oscar Health, and the amount I will be contributing on a regular is going to be just $10. So there you go. This is the roundup of the stocks I have in my portfolio. And I'm going to go back to the portfolio now to show you the 10 stocks that I have in my portfolio. Once again, if you are new to investing in the stock market, I highly advise that you stay away from stock picking, and it's better for you to get involved in an ETF. So let's go ahead and just round off the portfolio with the 10 stocks I have in the portfolio and what I'm using them for. So the 10 stocks I have in the portfolio is going to be Microsoft, Amazon, Meta, and Google. I primarily have these stocks in my portfolio as value plays. I do expect them to give me a bit of growth. Because of the massive nature, they're not going to grow as exponentially as the stock I do have in the portfolio for growth. The other stocks I have in the portfolio primarily is going to be for dividend, is going to be Realty Income. That's going to be O. Then I'm going to have Altria, which is going to be MO. I'm going to have Pepsi, which is going to be PEP, and Chevron, which is going to be CVX. These stocks are primarily for dividends. So every quarter, every month, I'm going to receive a check. I'm going to take that check I received to go ahead and buy back more of whatever stock it is in order for me to grow that stock a lot faster in the portfolio. Now, the last two stocks I have, which is going to be new, which is New Holland, which is in the banking sector, and Oscar Health, which is in the healthcare sector. These two stocks I have in the portfolio primarily for growth. I expect these two stocks to grow a lot faster than the other 8 stocks I have in my portfolio. Now, I want to hear from you. Are you guys already invested in the market? And if you guys are not, what is holding you back? If you are invested in the market, are any one of these stocks good enough, you think, to be put into your very own portfolio? And let me know why. Now, I go ahead and make all these videos because I really want to show these new investors out there. And I'm definitely talking to you watching this video right now. If you have $1, you have $2, you have $5 in your portfolio, you just received some money from your mom, your dad, your cousin, whoever, it does not matter. The best time to start investing was yesterday. The very next best time to start investing is right now. So go ahead and open up a brokerage account and start getting invested. If you don't know much about brokerage accounts, then I'm going to put a link in the description below in order for you to go ahead and consider those two. I do I am invested in those two accounts. Now, like I said, on this channel, I'm going to give you as much information as I possibly can in order for me to help you keep pushing your investments to the next level. So until the next video, keep pushing your investments.